Hey everyone, welcome back to Corporate Decoder, the place where we decode the juicy secrets buried in corporate filings. And today we're diving into Braemar Hotels and Resorts Incorporated's latest quarterly report. Their financial health is looking a bit like a hotel with fluctuating occupancy rates. And we're going to break down exactly what that means for investors and the company itself. Before we dive in, if you love getting unfiltered looks at company performance, hit that subscribe button, and you know the drill, there is a Discord community linked below if you want to chat with us and other finance enthusiasts live. Alright, let's start with the big picture from this filing. This is Braemar Hotels and Resorts Incorporated's quarterly report, and it gives us a look at how they were doing financially up to the 30th of September, 2025. Think of it as a financial checkup for the company's properties. First up, the balance sheet as of the 30th of September 2025 compared to the end of last year, December 2024. Their investments in hotel properties, which is basically the value of all their hotels, went from over $2.2 billion down to about $2.1 billion. That is a noticeable drop, suggesting they might have sold some properties or maybe the value of their existing ones decreased. On the flip side, their cash reserves also dipped a bit, from around $135 million down to about $116 million. It is not a red alarm, but it is worth watching if this trend continues. Looking at the net value of their hotel properties, after accounting for depreciation, it dropped from about $1.77 billion at the end of last year to roughly $1.68 billion by September 2025. Again, this reinforces the idea that their property portfolio has shrunk or its value has been adjusted downwards. Now let's talk about debt. Their net indebtedness was about $1.16 billion in September 2025, which is a slight decrease from about $1.21 billion at the end of 2024. While the debt levels themselves are high, the fact that they've managed to reduce them slightly is a positive sign, especially for a company in the hospitality sector where leverage can be a big deal. Now for the bottom line on the operations side, the net income attributable to common stockholders is where things get really interesting. For the 3 months ending the 30th of September 2025, they reported a loss of over $8 million compared to a smaller loss of about $1.4 million for the same period in 2024. This tells us that the company is losing more money on a per share basis for its common shareholders in the latest quarter. Looking at the 9-month period, the losses are even bigger, over $26 million in 2025 compared to almost $20 million in 2024. That is a significant increase in losses. Let's look at what's driving these numbers. Revenue from rooms, which is their main source of income, saw a drop in the third quarter of 2025 compared to 2024. It fell by over $6.7 million, or about 7.3%. The report mentions this is mainly due to selling off hotels, specifically the Marriott Seattle in August 2025 and the Hilton La Jolla in July 2024. That makes sense. You sell a hotel, revenue from that hotel disappears. When they look at their comparable hotels, the ones they've owned for both periods, occupancy dropped slightly from about 68.5% to 65.2%. But here is where it gets more nuanced. The average daily room rate, or ADTAR, actually increased significantly from about $376 to over $395. So fewer people are staying, but those who are paying more, RevPAR, which is revenue per available room combined occupancy and ADR stayed almost the same, just ticking up a tiny bit. The sale of the Marriott Seattle waterfront for $145 million and the Hilton La Jolla for $165 million are key events impacting these numbers. These sales generated substantial gains, around $41 million from the Seattle sale in the latest quarter alone. While selling assets can boost short-term gains and reduce immediate debt, it also shrinks the company's revenue-generating base for the future. This section on fair value measurements is a bit technical, but it's important. It looks at how they value certain financial assets and liabilities. For example, their derivative assets, like interest rate caps, are valued. It shows a small unrealized loss in the latest quarter. This is basically tracking the fluctuation in the worth of these financial instruments. This is a complex area, but essentially it represents the stake that outside investors have in their operating partnership. The value of these interests decreased from about $30 million to just under $19 million. This reduction might be due to redemptions by these investors or adjustments in the value of their stake, often linked to the company's overall performance and hotel valuations. Now, let's talk about their related party transactions, which are quite significant here. Braemar works very closely with Ashford Inc., and particularly Ashford LLC, which acts as their advisor. They pay Ashford LLC a base advisory fee, reimbursable expenses, and an incentive fee. In the third quarter of 2025, these advisory fees, including reimbursable expenses and equity-based compensation, came out to about $7.9 million. This is down slightly from the same quarter in 2024 when it was around $8.6 million. What is really interesting is that in August 2025, Braemar entered into an agreement with Ashford Inc. To explore selling the company, they agreed on a discounted termination fee for the advisory agreement of $480 million. Ashford Inc. even got an upfront payment of $17 million. This definitely suggests a significant strategic shift is being considered. The company is involved in a number of lawsuits. Notably, there is a class action lawsuit regarding employment laws that was settled for $850,000, with Braemar covering about 11.7% of that. There is also a lawsuit against Hilton entities impacting one of their former properties, with an agreed settlement of $3.5 million allocated specifically to that property. They've also had a cyber incident that led to a class action lawsuit, which is being settled for about $485,000, expected to be covered by insurance. While these are significant amounts, the company believes these legal matters, individually or combined, will not materially harm their financial position. Looking at their cash situation at the end of September 2025, they had about $116 million in cash and equivalents and another $47 million in restricted cash. They are confident they can meet their short-term obligations through operations, capital markets, and asset sales. However, they do highlight that their advisory fees have a minimum payment, which could hurt liquidity if their market cap drops. They also mention that one of their loans for the Ritz-Carlton Lake Tahoe is in a cash trap, meaning profits from that property go directly to lenders rather than the company. For the 9 months ending September 2025, their investing activities brought in over $106 million, largely from selling the Seattle Marriott waterfront and some securities. However, they spent over $54 million on capital improvements for their hotels. On the financing side, they used over $160 million, mostly paying down debt and redeeming preferred stock while also taking on new debt. So what is the story here? Braemar Hotels and Resorts appears to be in a transitional phase. They've been selling off some of their hotel properties, which has impacted their revenue, but also provided cash and reduced debt. The increasing losses for common stockholders and the ongoing reliance on advisory services from related parties like Ashford Inc. are reasons for caution. The potential sale of the entire company signals a major strategic move, possibly to unlock value or navigate financial pressures. While they are actively managing their debt and have generated some gains from sales, the rising losses and the ongoing sale explorations suggest a period of uncertainty. Investors should keep a close eye on how these sales and strategic discussions play out, and whether the company can stabilize its profitability and better manage its debt load. That's our deep dive into Braemar Hotels and Resorts' latest filing. What do you think about their strategy and these results? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up, and most importantly, subscribe for more unfiltered corporate insights, and don't forget to join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and see you in the next Decode.